Hello again, everybody. This is Sunil Thakur of stsuretrader.com. This is our website here, stsuretrader.com. And this is our third video for technical analysis basics. We're just talking of the basics here, okay? And finally, on this third video, we are going to reach the topic of candlesticks. If you remember, some time ago on our Facebook group, I made a poll asking how many people know about technical analysis and candlesticks, and apparently very few people know about candlesticks. So in this video, our third video of technical analysis basics, will actually take up candlesticks finally. Now let's just get a preview of a recap of what we've done so far. Okay, let's not forget the most important part, which is the three basic premises of technical analysis. Price action discounts everything. Whatever has to be known is already known. Price moves in trends. They don't move in a straight line, because if they do, as soon as we graduate from college learning the fundamental analysis, we should be rich by now. But that's not the case, right? Because prices move up and down. And of course, history tends to repeat itself. I'll be showing you all of that. This is the last time I'll be showing you the three basic premises of technical analysis. Please do bear this in mind. These are the foundations of technical analysis, and why we do what we do, and how we make a profit doing what we do. Okay, so let me get rid of this one. Now let's check our course outline. We've already talked about the close, and we've talked a little bit about volatility with the ATR. I hope you remember that from the second video. We've talked about line charts and three-line break charts in the first video. Bar charts and candlesticks, that's what we're going to take today. Renko, we've talked about this in the second video, as well as peak and trough analysis. Okay, so what we're going to talk about today is bar charts and candlesticks, which is where the whole topic began to start with. And in the next video, we'll talk about trends and indicators, okay? But for this video, we'll talk about candlesticks and bar charts, because you already know about the three-line break charts and the Renko. Okay, so let's close this one down. Wait a minute. Okay, I goofed up there a bit. Let's get back to the course outline. Let's start again from the price quotations, okay? Here we are, the price quotations. If you open the stock market report on your business page, you'd always find the stock market being reported in open, high, low, close, and volume. Okay, so if we're talking of end of day data on a daily basis, the open is the very first trade that happened as soon as the bell rings, which is usually for US stocks is 9:30 a.m. New York time. For Indian stocks, I'm not sure if it's 9:30 a.m. or 10 a.m. Indian time. Okay, and the close is the very last trade made of the day. Again, that's about 4:30 p.m. New York time, 4:30 p.m. India time. That's the same. The high is the highest trade made within the day, and the low is the lowest trade made within the day, and the volume is the number of shares that actually changed hands within the day. We are talking of end of day. Let me just delete this volatility here. We are talking of end of day. EOD for short. Okay, EOD, end of day. This is as far as the daily price quotations are concerned. Now, what if you want to look at a weekly chart? For a weekly chart, the open is the very, very first trade made, usually on a Monday. It's the very first trade made on a Monday, usually. The close is the very last trade made on a Friday. As usual, the high is the highest high reached within the week, and the low is the lowest low price reached within the week, if you're looking at the weekly chart. And of course, you have to take into consideration volume. Volume is also very important. We'll take this up in the future videos when we talk of advanced charting methods, okay? But definitely volume plays a crucial role. As I said, we'll take it up in future videos. Now, why do we really look at price quotations? Because remember, the premises of technical analysis, the very first and most important premise is price action discounts everything. Whatever has to be known is already known, one way or another, by one or another person or persons, and we are just reflecting what we see happening in the markets. We'll get deeper into this, of course, in future videos, but this is the most important part to bear in mind. We don't ask questions why. Why is a stock price falling? Is it because the president was caught in a scandal? Is it because the company is losing money? We don't ask those questions. Why is the price rising of a stock? We've had trash stocks all over the world. In the Philippines, in India, in the US, trash stocks are going up. And why are they called trash stocks? Because they're not generating profits. But somehow, there's some human interest in it. Okay? So we really look at the price quotations and the human interest in it. And when we say human interest, we're talking of human emotions and expectations. And the expectations and emotions are really based on greed and fear. These are two very strong and powerful emotions that humans have, which drives market prices. Anyway, we'll be getting into this one with more detail in future videos. So we've talked of line charts and 3-line break charts already. This is all covered in video 1. We've talked of Renko and peak and trough analysis in video 2. So this is the third video. We're gonna talk now about bar charts just a little bit, because we're really not gonna use bar charts a lot. We're gonna talk about candlesticks, which kind of makes me laugh because I'm gonna give you guys homework. Okay. Yes, I'm giving you guys homework assignment. Uh, you think you've outgrown that after you graduated from high school or college, whatever. Nope, you still got homework to do here. I spent 20 years studying technical analysis and over $10,000 studying technical analysis. Well over $10,000 actually. Never mind that aside. I'm giving this to you for free, and I'm going to show you how to learn this for free. Trends and indicators will take up on the fourth video, okay? And on the fourth video, we'll also take up the difference between CFD and binary options. So in this video, we'll talk about bar charts and candlesticks. Just a little bit on bar charts. Okay, let me close this one now. Okay, so let's go over to bar charts. How are bar charts computed? These charts are actually from Chart School. I just downloaded them and enlarged them so you can see them clearly, whatever video format you're using. This is the high-low close HLC bars. So the high is plotted as the top of the bar. The low is plotted as the lowest of the bar, and the close is just a crossbar, horizontal on the vertical bar. So again, you can see like on a day-to-day basis, this is the high, this is the low, this is the close, high, low, close, high, low, close, so on and so forth. So you can see you can squeeze a lot of data in a small time frame here. You can squeeze a lot of data here using bar charts. There's another form of bar charts which is OHLC, which takes into consideration the open as well. Here it is. The OHLC bar chart, let me enlarge this for you. Here you go. The open is plotted as a horizontal bar on the left. The close is a horizontal bar on the right. The high is, as usual, the highest high in the chart, and the low is the lowest low in the chart. So let's say for this bar, this here is the open, this here is the close, this is the highest price it reached within the day, this is the lowest price which it reached within the day on this particular day. On the next day, this happened, this was the open, this was the close, this is the highest high, and this is the lowest low. As you can see, you really can't get much info out of bar charts unless you really look at long-term technical analysis. The good thing about bar charts is, as I said, they squeeze a lot of information in a small amount of, shall we say, real estate, computer screen real estate. So in such a small screen, you can have a lot of data. Now, going back to the first one I showed you, this is also Sun Microsystems. This is just the HLC, and this covers the same period. This is the same period of Sun Microsystems, which is the OHLC from Sun Microsystems of the same period. And now we go into Candlesticks finally. Sorry, here we go. Candlesticks for Sun Microsystems covering the same period. Now in a candlestick, you have a real body here. With the real body, if the open is lower than the close, you would usually have a white body, as you can see here. Or if the open is higher than the close, which means the closing price closed lower than the open price, then you would have a black body or a red body, as you can see here as well. Okay, so this is a negative sign, this is a positive sign, more or less speaking. The high is up here as usual in both, and the low is here. These are referred to as shadows. Okay, shadows are part of the candlestick as well, and they form a very important part of the candlestick. Now, just to give you a quick look at how effective candlesticks are, excuse me. Here we have the bearish engulfing signal. I'm sorry, I mean the bullish engulfing signal, which is a positive signal. And it just came after a hammer, so to speak, because of the long tail. And true enough, prices did go up. You will see false signals in the middle. This is a harami. This is a doji. False signals happen in the middle. So you have to take into account what's going to happen next. We'll be taking that over in just a short while, so don't worry about that one. Here you see the bearish engulfing signal. The open was higher, but the close was lower than the previous bar. And this is a very bearish signal, and true enough, the price went down. Again, you have the bullish engulfing signal. Again, the price went up. Well, here you see it's getting a bit choppy, and you see a lot of false signals here and there. Okay, this is just to give you a quick glimpse of how candles are. So, okay, this is the first time I'm gonna be giving you guys homework. Like I said earlier, don't think you finished high school, college, whatever. Don't think you're done with homework. You still have homework to do. Because I'm laughing about this because I was thinking about it earlier. Man, how do I do videos on candlesticks? Because candlesticks are quite a bit of a deep topic, and I really want to finish the videos by July or early August, because at least the basics videos, because I really want to get back to trading. I haven't been trading in quite a while. I've been busy putting up the website and the Facebook group, and of course the videos and the tips that I'm providing you on a week-to-week basis. Anyway, here is your homework. If you really want to learn and make a profit, you'll have to go here to stockcharts.com. Okay, here is the website, stockcharts.com. It's very easy. Click on Chart School right here where you see my mouse is, and here you are in Chart School. What do you want to learn? And we click on this box and just type in candlesticks. And we hit the enter button. Okay, again, as in the past, you only want to look for the CS, okay? The very first CS that comes up is Introduction to Candlesticks, which I'm gonna open in a new tab just to show you. You have then also, of course, candlesticks and support, candlesticks and resistance, candlesticks and traditional chart analysis, which is very, very important for you to learn. Sorry, I'm having a bit of a cough. Candlestick pattern dictionary, which is also important for you to learn. The bullish reversal pattern again, and the bearish reversal pattern again, very important for you to learn. So 1, 2, 3, 4, 5, 6, 7. Okay, that means you got 7 homeworks to do here. Alright, you better get working now. Introduction to candlesticks. Okay. Like I said in the past, candlesticks are nothing new. They've been used since the 17th century for trading rice in Japan. And very similar to what we're talking about in technical analysis. Okay, let me highlight this here. The what, which is price action, is more important than the why. The news, the earnings, and so on. What happens with the price action is much more important than why it even happens. All known information is reflected in the price. As we discussed earlier, the price is a consensus. Every time a trade happens within a day, the price is a consensus between a buyer and a seller. So that is the shall we call it the intrinsic value of the underlying asset. Whether it's overvalued or undervalued, it really doesn't matter fundamentally, because that is what people believe in. Buyers and sellers move markets based on expectations and emotions, fear and greed, as usual. Markets fluctuate. Yes, they move in trends. They don't move in a straight line. We've learned that after failing from college. We know what we've learned in college don't reflect in the markets. I've said that again and again. Markets fluctuate, so we really have to look at the price action itself. And the price may not reflect the underlying value of the asset. So, that said, that is technical analysis and how you make a profit from it. Now let me just quickly scroll down. You can see here the formation, how it's constructed, and here's comparison between candles and the traditional bar chart. As you can see, candles are a lot more intuitive. You can see snap signals. They really are very good early warning devices of trend reversals that could happen. They are fantastic early warning signals. Okay, that's the best way to use them. Combined with, of course, in video 1, the 3-line break, and video 2, the Renko and peak and trough analysis. Combine these ones together with candles, and you've got a winning formula right there. You'll be a sure trader right there. So, long versus short bodies and the story about that. This is your assignment. Okay. Sorry if you get dizzy by my scrolling down a little fast, but this is your assignment. It's up to you to research this now. Introduction to Candlestick. This is the click here from Chart School. Just type in Candlestick and you'll get Introduction to Candlesticks, which we have here. Okay. So now you could learn more about candlesticks and how they're constructed and why they do what they do. Take into consideration human emotion. Now, of course, when you look at a candlestick formation, you always look at the context of the candlestick. You always look at what has happened prior to the candlestick forming. Okay, so here you have a hammer and a hanging man. Again, I'm not gonna get too deep into discussion here. This is your assignment, this is your homework. You gotta have to do some research here. Okay, it's very easy. It's just a one-page web page. If you want to buy books, you can buy the books on Amazon by Steve Neeson and Gregory Morris. Candlestick Charting Explained, and of course Steve Neeson is known as the father of candlesticks, Japanese candlestick charting techniques. There is another book I recommend, which is Beyond Candlesticks, also written by Steve Neeson, and you'll find that one on Amazon. Now, I'd like to show you some examples before we end this video. Let me just give you a quick glimpse of how candlesticks work. This is for the Indian stock market, for example. Maruti Suzuki again, we look at. Here we are, Maruti Suzuki. And here we see candlesticks. Okay, so if we look at the past, we can see, like here, I'm not sure if you can see my mouse because unfortunately it's really small. Well, here, okay, let's start from the beginning. It is Feb 13 of this year. We had a strong bullish pattern which didn't really materialize. But again, we had a hammer with a bullish engulfing pattern, which didn't again, well, it did materialize if you're a day trader. Okay, if you're trading on a day-to-day basis, it did materialize. You have a bearish engulfing here, which again did materialize. Another bullish engulfing, which did go up. This is not really a very solid signal. Okay, this one here is a much better signal. This is the piercing pattern. Okay, so you have this is like, you know, Japanese like using fancy words. So this is at night, and this bright candle here is like the sunlight coming up, and you've got up movements again. Then again you have the down. Well, this is one wrench in the machinery, I would say. Look at that long tail here. It's really something to wonder about, why that long tail formed. It's a very long tail, a very long shadow. I'm not really sure what to say about this, if this is a strong support or if this was something hidden underneath the table that happens. I mean, for you guys here in the Philippines, I'm sure you're aware, like something similar happened with To Go recently. And again, just I think yesterday, if I'm not mistaken, CAT in the Philippine Stock Exchange market. So sometimes things like this happen. So that's the importance really of having a good and nice risk management system added with your trading pattern. And we're going to get into risk management on the 5th video, which is actually the advanced video. We're not anymore in the basics here. Now, I just want to give you a closer look of candlesticks using, let's say, US stocks. For US stocks, I'm going to be using Pro Real Time. Again, as you can see, there's no purchase obligation, and regardless what country you're in, you're in the Philippines, you're in India, you're, I don't know, wherever you are, you can trade the US stocks using CFD. Just click on the links I've provided for CFD account. You can also trade US stocks with binary options, as well as Indian stocks, of course. Well, anyway, this is the Pro Real Time platform for US stocks, which I'll be showing you. I'm just using this one because I can make the screen a lot larger so you can see what I'm really talking about. Here we are. Now you can see the weekly charts and the daily charts. We're going back for 2 years here. Alibaba, you can see in the past few weeks since March, it's all been positive signals. We did have a hanging man. This was on May 22nd, week number 21. And as you can see on the right side, this is what was happening. Okay, on the daily charts. Here's a doji. As you can see, nothing much really happened. The price moved a little up and down, but the open and close were the same. Then we had, boom, a big gap. That's what happened in the weekly charts. Then again on the downside. Okay, so let's just take this into consideration. We'll be talking a lot more of candlesticks in the future videos. Definitely when we get into advanced charting. Let me just show you again another example of, let's say, Boeing Company. Here you are. If you're trading on a long-term basis, this is not a good signal to get in, obviously, because on week 10, 6th of March 2017, it's had what's called a dark cloud pattern. Okay, so like this is the sun, and these are dark clouds covering the sun, which means it's gonna rain. And true enough, it did rain a bit. Price went down. Here we are now on a very bullish pattern, which is the bullish engulfing pattern. And as you can see, this started on the daily charts here sometime in April 17th to April 21. This started the uptrend here. Again, we had a false break here, but it continued upwards. Okay, so this is just to give you a quick glimpse of what candlesticks look like and how effective they are, whether you're trading on a day-to-day basis or a week-to-week basis. And this can be used even on 1 hour basis or even 5 minutes if you're that active. If you really want to sit in front of the computer and do some trading, you can use candlesticks on any time frame, from weekly, daily, 1 hour, 5 minutes, you name it, you got it. And in fact, if you look at the triple screen perfect order system that I posted on the group, you will see that indeed we use candlesticks as well as moving averages. Okay, so please do your homework. Let me just close this one out now and bring you back to the homework page. Okay, let me log out from this one. This is absolutely free. You must try this one. You really must try this one, Pro Real Time. And also, you definitely should try stockcharts.com. Everybody has a different taste, so you might find this more comfortable than Pro Real Time. Some might find Pro Real Time more comfortable than stock charts. But in any case, you really have to do your homework. Go back to the home page here. Click on Chart School here. Enter candlesticks here, search, and you really must read through these 7 articles here. 1, 2, 3, 4, 5, 6, 7. The candlestick bearish reversal, the bullish reversal, the pattern dictionary, the candlestick and traditional chart analysis, which is very important, candlestick and resistance, candlestick and support, and of course you should start from here, the very first video, the very first instruction of candlesticks, the introduction to candlesticks, so you understand what's going on really. But you really must go through these 7 instructions here. This is your homework assignment. You really want to learn, you really want to make profits in the financial markets, you must do this. Guys, I spent 20 years and over $10,000 studying this. This is all available for you right now for free, absolutely free. Take this advantage, take this opportunity. Do sign up for these courses, and please do sign up for the demo accounts, the virtual accounts I mentioned earlier, so you can practice what you're learning. I'll see you again on the 4th video, where we're going to talk about trend, finding the trend, and some indicators. Okay, thank you so much for watching this video to the end. See you guys again in the next video. Bye bye.